What is up, guys? Welcome back to another video. I'm super happy to have my boy Brandon here. We're going to go through our exact fair value gap strategy that has been super accurate in the last 6 to 7 months. It's something that's worked really well for me along with my supply and demand strategy. So I hope you guys really enjoy this, and let's just get right into it. In the last 6 or 7 months, me and Brandon have been using fair value gaps a lot. And one thing that we notice is that I use support and resistance and supply and demand to give me an edge, and he likes to use the fibs. And well, everything tends to align with fair value gaps. So I'm going to show you exactly the trade we took today and how we executed it in different strategies. I marked out the pre-market low and the pre-market highs of every trading session. Then I also mark out support and resistance. So today in pre-market, we can see there's resistance here. We touched it once, twice, and basically 3 times at this 446.6. Coming into market open, price was getting pushed up and started rejecting off that exact level. And one thing a lot of people do is struggle with finding the best entry. And they think if they can't get the best entry, then they can't take the trade. Well, one thing that I found best, that works best in my strategy, is to watch the move actually happen and then capitalize off of that move. And that's where fair value gaps come into play. So today, there's 2 areas of where they worked. So the first one was right here. We see a rejection off that resistance. We have a fair value gap right here. What forms a fair value gap? Well, what forms that is the neighboring candle wicks aren't touching. So this neighboring candle wick comes down to here. This neighboring candle wick is right here, therefore leaving a fair value gap in this candle. It's basically an efficiency where, in this case scenario, sellers are sitting to get filled. Price action gets pushed up, rejects down, and makes this nice move down. Now, for everyone that knows me, there's another reason of why I took this trade, and that's because we have these EMAs here. It rejects off the 9 and the 20 EMA and makes a nice move down. That gives me 3 reasonings to have conviction in this trade. We see a rejection off of resistance. We see a retest of this fair value gap, and also the EMAs. Gives me good risk to reward because simply I would stop out of a 5-minute candle close over this fair value gap. Quick reminder, I always use fair value gaps on the 5-minute. Brandon uses them on a different time frame as well, so he'll go in that strategy once he hops on. Now, the trade that we took together today was right here. We see this nice move down, and I capitalized off this nice move down, but also we see a bearish fair value gap form right here. With that being said, we have this fair value gap, and one thing I like to see is that it correlated with my pre-market low. We break my pre-market low, we come back up, and we start to retest that as well. So we have, not only do we have the pre-market low retest, but we also have this fair value gap. And you can see we're kind of holding this VWAP. We're a little bit over. We did break and hold over it, but we're still in this fair value gap. So I felt like I had the proper conviction to hold this trade. Well, it doesn't seem like much. This little move to the downside actually profited me a good amount. I actually made $380 on this trade. I wasn't heavy. I was in SPX, so I was only in 2 contracts, like literally super, super light. I'm not sure what Brandon was in, but again, simple, small moves like this can profit you a lot. And when you have the best like sniper entry like we did here, it really can dictate whether the profitability of the trade. And that's why I feel like fair value gaps give you a good edge, especially when you align them with the EMAs, pre-market lows, pre-market highs, supply and demand, and the Fibonacci's. That's basically how I utilize fair value gaps to give me an edge on the market. Now I want to give you Brandon and have him explain his exact strategy.
Alrighty, so yeah, when it comes to my trading, I'm not simply just taking trades based off the fair value gaps, and I think that's a really important key point that I want to point out. I see a lot of people who, you'll just see a fair value gap and they're like, okay, let me go long or short, but you always want to have more confluence, right? So, whether it be VWAP, moving averages, previous support or resistance, supply and demand, Fibonacci, etc., I'm looking to identify fair value gaps inside of those zones as well, giving me more confluence in the market. So if we're looking at the trade that we ended up taking today, live in Teambull, me, GD, Nate, we all crushed this trade to the downside. There was a lot of confluence in this area right here. Not only was it 445, which was psychological support turn resistance. So as we see, we come down to it in the morning, pop off of it, break it. We want to look for a retest at 445. So that was one confluence. Confluence number 2 was this fair value gap right here. So as we see, price was not accepted in this zone right here at all. And the difference between here and here is, right at this spot right there. So we have a fair value gap. We're looking for price to then be accepted inside of that zone, which you can see was right at that 445 as well, all the way down to 444.8. But then also on top of that, third confluence was simply taking pivot high down to pivot low. So we had 445, we had a fair value gap, and we had a fib at 445.06, all in this one zone right here, which made it a very high probability trade. And as you see, because we entered like literally right at 445, we were able to catch this down into this 440, or what was this, 444.22. So a nice, it's nothing crazy, but 78 cents is 78 cents, right? So it was a profitable trade, and our stop loss was right above 445.25. So we were risking 25 cents to make 77 cents. That's a 3-to-1 risk to reward, or a 3-to-1 R, right? So that's just one example of how I use the fair value gap. Another trade that I ended up taking today, and me and GD talked about this, I really like, if I am going to take a trade strictly based off of a fair value gap, it's going to be after a liquidity sweep. And I'm using smaller time frames to identify these levels. So I have a video over on my channel. You don't care if I bring up my channel, do you? No. Okay. I have a video on my channel talking about liquidity sweeps. I have 2 videos about that. So definitely make sure you guys check that out. But I brought it up today that this 44.59 was the lowest point right here. So maybe we break it and we get a liquidity sweep out of it. So as we can see, price broke below 44.59, reclaimed the opposite side, dropped down to 44.58.5, reclaimed the opposite side, giving us that liquidity sweep. Now from there, as we can see, if we break it down to smaller time frames, this is typically when I will use a smaller time frame fair value gap, either a 1 minute or 2 minute. This isn't the best example of one, but we had a very tiny one right here, a very tiny zone, right? And price traded down into that area. That's when I got long with ES with my stop loss right below this low. And I was able to ride it up towards that 44.70, which was previous support, then turned resistance. And you can see that we rejected right off of that 44.70. So that was just another example right there. If you're looking for another one on the 1 minute time frame, let's see, that's right. Come on, stop snapping. Oh my God. There we go. There's another one on the 1 minute time frame, but I will say I like the higher time frame ones, just like anything else. The higher the time frame, the more important it's going to be. But if I'm really trying to fine tune, a sniper entry because I have reason to believe that price is going to bounce at that specific spot, then I will break it down to a smaller time frame, 1 minute, 2 minute, maybe a 3 minute. But yeah, there's so many different ones that we could use. You traded this one, I think you just went over that, right? Again, using confluence, 8 EMA, 21 EMA. We had a nice little drop to the downside, a low volume pump to the upside into the moving averages with a fair value gap. So what do we want to look for? We want to look for shorts, and then our stop loss would be, why does it keep snapping? Come on now. Right above this high.
Use your Fibonacci just for someone that panel. How exactly do you use them, and like what do you do to prepare them like on your screen?
Yes, sir. So when it comes to identifying Fibonacci levels, I mean, I want to use the higher time frame ones first because those are just going to be the highest probability zones. Like if we have a clear trend intraday on the 5 minute, then I'll draw them. But a majority of them are coming from the higher time frame. So 2 trades that we ended up taking last week based off of fibs, and I mean a majority of my day trades are based off of fibs, but 2 of them that really stuck out last week was just simply finding the lowest low of an impulse move, right, which is right here, to the highest high of an impulse move. So low, high before price starts pulling back. As price starts pulling back, we can then say, okay, we can take low, high. Let's watch these 2 areas. So that was the one. This was the second one, right? This was my high probability bounce area all of last week, 445.28 all the way up to 445.3. So then if we go back to last week, we traded this 2 days in a row. You could have even traded it here. But as we see, the first day we were able to catch it. I actually think we caught this nice little pop to the upside, nothing crazy. And then it came back down later in the day, hit it to a T. And then as you can see, it just rocketed for the remainder of the day. Second time we were able to catch it right down here. Same exact thing. Just watching the price action, you can even see over here that 50% retracement was a key area until price finally broke below it. So the main thing I'm doing is just identifying where are these lows and where are these highs, and you can find them on multiple different time frames. You can find them on the daily, 4 hour, 1 hour. I'm trying to think. I'm pretty sure, like 99% sure we just took a reject yesterday based off of these on spot. I'm pretty sure. Yeah. So yes, this was the trade that we caught. Yeah. So as we see, we make that move into that 50% retracement, and going back to the 1 hour, you just see I took this clear high all the way down to this low, high of the impulse move, low of the impulse move before price starts pulling back. We can draw those and say, okay, let's look for a reject here. Let's look for a reject here. So then as price is trading in my key area, I'm watching smaller time frames, 1 minute, 2 minute, and sure enough, this was entry number 1, which we were able to start our position. This was entry number 2, and then we were able to catch this nice move to the downside. And what did price drop right into before pushing back up? A little fair value gap, which was, where did I have this drawn? Right here. So if we just go ahead, and you can use fair value gaps as price targets too. So yeah, I mean, pretty much what trading comes down to is, identifying multiple different ways that you can identify, levels of interest, right? Because some people might be looking to go short up at this Fibonacci. Some people might be looking to go long down at this fair value gap. People who are going short at Fibonacci could use the fair value gap as a price target, which is exactly what we did yesterday. So I think being able to identify, supply and demand, support and resistance, fair value gaps, and Fibonacci, and kind of piecing them together and creating a strategy out of it, it has definitely helped in my trading a lot. So I definitely appreciate you having me on here, GD, and hopefully we gave everybody some fire education.
Yeah, bro, I'm happy to have you on, and it's really good to see your Fibonacci levels. I think it's a lot of people use them. I personally don't really use them much in my strategy, but it's always nice to see when we're trading that, you say the Fibonacci's align, I say this aligns, and then, we have extra conviction in trades, which is really, really cool. Thank you guys for watching. I really appreciate it. If you learned from this video, make sure to comment down below. Go check out Brandon's page. It will be tagged down below as well. Thank you guys. Have a great day. Safe trading. Peace out.